historical analog for the current market. This guy is the master of looking at the history of the market and spotting patterns or cycles that tend to repeat themselves. We believe it in sports, we believe it in art, we believe it in this. This time, nature's got it all over the place. This time he set out to find the best fit for the last 250 days of market action, looking for analogs from 1990 forward using timing solution software. Using the years since 1990, Williams found that 14 of them were good forecasts, that's 42%, catching the trends, most turning points or prior years. 11 of them were just total failures at forecasting at all the next year's trend or even pivotal moments. That's a third. Finally, 8 of them, or 24%, were so-so forecasts, equal parts correct and incorrect. In short, looking for historical analogs, almost 60% of the time, they failed to correctly forecast the market's action in following years. Sometimes, though, they work like a charm. Daily chart of the Dow Jones Industrial Average in 2018, dark line, okay, turns out the year 2000 was a 40% fit to 2018. Meaning it picked up a lot of the changes in the market's trajectory. Remember, 2000 was the dot-com collapse. 2018 turned out ugly when, turned out right at the end when Jay Powell vowed to raise interest rates aggressively in order to stamp out nascent inflation. So these are good overlaps. If you extrapolated from there and took your cue from 2001 to 2019, you picked up some important turning points. Take a look at this one. Next, you can see my turning points. This catches a lot of them. Next up, check out the action in 2020 when COVID hit, which is in black compared to the action in red in 2009, when the market bottomed during the financial crisis. You can see the correlation was incredibly powerful. Williams says there was a 77% fit. Makes sense. Both years saw the market collapse in the first quarter, only to find a floor in March, and then rebound nicely for the rest of the year. So let's say you extrapolated from there and used 2010 as forecast for 2021. Take a gander. Again, surprisingly close in terms of nailing important turning points, and the overall trajectory is pretty darn close too, isn't it? I bring these up because you need to know that when this kind of methodology works, it really works. All right, so how about the current moment, which is what you've been waiting for? Williams says the closest analogy for 2021 was actually 2013. Take a look. Last year is in black, 2013 is in red. That's a 95% fit, practically lockstep. So, if we push that forward, could this year turn out to look like 2014? When you look at the comparison, the overall trajectory was much more positive in 2014. But there's also some real overlap in terms of important highs and lows. After running in June and July, the market took a big hit in August of 2014. Not unlike what happened last week, right? And then it took off again through the end of the year, with the exception of that short, sharp pullback in October that we're going to have to be ready for, people. You know that's coming. And that was, you know what this was? And why I don't think it's going to duplicate. This was the Ebola scare, okay? Now we're not going to, well, hopefully you don't have another Ebola scare then. But that's what caused that big decline. If Williams is right that we can be taking our cue from 2014 here, that's surprisingly positive. Much better than 2001 or 2008 analogies that we hear constantly. In other words, I look at this and I think, you know, this makes more sense in 2001, 2008. And if it's so, then I like where we are. I think we're at a good level to buy. However, if you want an even better fit for the action, get this. Williams says it's 1962. Take a look at the Dow's recent performances in black, while the 1962 performance is in red. Can you believe this? Might as well be joined at the hip. And once again, the 1962 analogy says we could have a very nice run in November and December after some sideways action, and again, that turbulence that we're so worried about in October. Finally, if you want to see something really eerie, I want you to suspend your animation for a second. I want you to check out this one. The Dow's recent action is in black, while its action in 1891 this guy likes to go back, is in red. Once again, the closest historical parallel Williams can find suggests that we have pretty good time at the end of the year, okay? So I know this is just, for some of you, it's hocus pocus. For me, I think it's gospel. I love it so much because the guy's been so right. Larry Williams, I really trade. Here's the bottom line. These historical analogs tend to be pretty hit or miss, but when you look at the years with the closest fit to 2022, the charts as determined by Larry Williams suggest the rest of the year is looking pretty darn good. Despite what we went through last week, he's a buyer, not a seller. And don't forget, a little bit of October turbulence. but we want to buy that too.
Go.